Good evening again, Clueless 8. So let's start off with a quick look at the Nasdaq Composite. Covered this in extensive detail last night, so please make sure you review last night's video casts to see a continuation of this story and the drama that unfolds. It'll make better sense. You'll manage to sort of connect the dots as we go along, and eventually become a pretty expert reader of these very scrambled and complicated charts, if you want to look at it that way, because there are pattern symmetries, but on an intraday, intra-week basis, the charts, thanks to algorithmic HFT, high-frequency trading programs, are completely smashed to pieces, rebuilt, thrown back again, and I'll tell you, this is one heck of a volatile market that I've traded in many, many years. But then, we're still surviving, we're still doing well in many fronts, and as long as you're nimble, you pick up the pieces when things are down and run with it. Today was a prime example. You'll certainly benefit from and capture and win over the beast that we call the stock markets and become a better trader. So, saying all that, let's take a look at the daily chart. Let's start off with the daily chart of let me get all these lines out here. The daily chart of the Nasdaq Composite, and as you can see, we had a pretty powerful day here. Based on what was going on yesterday, we did not have a bullish engulfing candle that would be over 45.72, about 20 points higher, but we didn't get that. We did get a very strong reversal candle here, which needs a continuation phase, which would mean that we would possibly print highs on the upper acceleration band around 4600 on the Nasdaq Composite. That would certainly imply that suggest that Apple would be somewhere around 104, 105. You would see the Googles back to 600, the Teslas back to 280 plus, the price lines back to about 1200, and those type of stuff going on. Of course, the biotech index, which really, which also turned around and reversed and rallied hard today, would need to print higher numbers in order for the Nasdaq overall composite to get up towards the mid 4600 levels. So saying all that, let's take a quick look at let's look for pattern symmetries. Okay, we did that yesterday, so we'll do it again today. This was the big drop, obviously the humongous drop where we went and tested the 200-day, and that was back in the March-April phase. This pattern looks more like the pattern that we saw as we came down here, and that would be back at the end of July and early August. So if we do that pattern, then we would be basically doing this and then making a high here. So that's what I'd be looking at as a move up before we start to consolidate again. Let's take a 60-minute look. And the 60-minute look, you can see, is a little bit more detailed, quite a bit more detailed. And at this point, we can say on a short-term basis, it's possible that we come down and we consolidate somewhere around 45.36. What does that mean? That would mean we'd see some of these high-flying stocks that we saw the price lines up a gazillion points. What was it? It was up 16. It was up 19. Sorry, it was up 19 and change from lows of 11.53 and lows of 11.39.40 when I recommended buying some calls yesterday. So basically, from that point on, it moved up almost 40 points. I did mention to one of my loyal followers that generally, price line's down 200 points from the top, so it's kind of natural that it would gain back at least 50 to 100 of that. So if you do the math, it's gained 40 of that back. I think it's still got room to move up. My Fibonacci retracement charts and other charts that I've shown specifically on Priceline, which you can review on the static charts that I'm put up there intraday, and I'm going to re-input them in the chart gallery tonight. You can see that we could pretty easily get up to about 1210, 1220 before we pause. So there we have with the Nasdaq. Now we are not out of the hot, we're not out of the hole yet. To be honest with you, this is still a complicated chart. Uh, if this pattern basically completes itself, if you want to look at this pattern, then we had this move and then a big drop. So if you do it like this, then we will basically, oops, we would have to go like this, right? So that would be the pattern we would need to basically get over the 50 moving average and get towards the 34. So again, we probably see a slight pullback tomorrow in the confusion of Janet Yellen's Fed speak, and then we move on and print a higher high going into Friday. This is just my gut feeling. Anything else can change. We could certainly pull back down and go the other way, but we've yet to see what happens. Let's take a look at the Russell 2000. Again, this one was the weakest of the lot. It fell apart and then it pulled up again. Extremely volatile day today on the Russell. The IWM had a range of 113.40 to 114.43. A point. The Russell 2000, excuse me, had 1141 to 1152. That's 11-point range. That's generally what it seems to trade in these days. This is a chart which is far difficult to interpret. My lines have so far worked very well. This was a gap in the daily. I don't see where's the gap. There was a gap here. I'm going to show it to you on the other chart. I did show it to you last night, which got filled. At this point, we could see this slip towards the 38.62. It came down to the 50. What am I doing here? Hold on one second. Okay, that's better. We came down to the we came down to the 62 fib. We bounced off that. We pulled back, and at this point, unless we get over convincingly over 1160, the chances are that we can still slip down and test. We could possibly test the lower Bollinger at 1139, or come down and test the uptrend line. Actually, let me draw it from here. Sorry, I had this chart a little bit. Okay, so the uptrend line basically intersects at around 1133, so we still have that in play. So it's a more of a difficult situation going on here, and unless we break out, as we zoom in, if we break out over the 50 moving average, then we can start to scale some higher heights. Very difficult chart to trade. I like to stay away from it at this point because these moves are the candles are so volatile, and the algos come in and sweep up and down, and you can see that on the futures, the TF underscore F. You can see the drama being played out on a 5-minute, 10-minute, 15-minute, half an hour basis. Let's take a look at the hourly chart. The hourly chart basically let me get all these lines out so it's a little bit of a cleaner picture. Okay. You can see what's going on here. So again, this is not, we are starting to see some semblance of sanity here with the histograms going green, the crossovers happening. But like I said, we would need to see 1176, it would be the most optimistic mark, but we would like to see this over 1158 and certainly over 1166 in order to somewhat change the trend that we're seeing here. This could be construed again as a consolidation flag, and I hope I'm not running out of time. Like that, parallel line there. So you can call it a wide consolidation flag as long as we stay within the channel and then try to break higher. So again, be very careful with the Russell 2000, and the moves are big, they're wide, but you got to be fast, and you have to watch the futures, and you have to understand that this is probably one of the most volatile trades that you would do. They're very lucrative when you catch a directional bet, which sometimes can last as little as 5 minutes or as long as an hour. So we'll see what happens. Okay, Let's take a quick look at the RVX and the VIX on the other chart and wrap up the night.